Imagine this. A company sees its stock just plummet,
Right.
over 29% drop after hours.
Oof. Yeah.
But then its leaders come out sounding incredibly optimistic about the future. How does that even work?
It's a real head-scratcher sometimes, isn't it?
Definitely. And that's the puzzle we're looking at today with BigBear.ai.
Right. BigBear.ai. They're a pretty interesting company in the AI world, known as a leader, really, in AI for decision intelligence.
And they focus on some critical areas.
Yeah, exactly. National security, defense, travel, trade, enterprise stuff. So pretty broad, but also quite specialized.
So for this deep dive, we're looking at their latest quarterly results, Q2 2025, and their investor presentation, plus a report from Tipranks. And our goal here is really to unpack these, well, seemingly opposite messages, understand the short-term issues versus the long-term plan.
And hopefully pull out the key takeaways so you can get a clearer picture of where BigBear.ai stands and maybe where they're headed.
Let's get into it. Okay, let's start with that immediate picture. The headlines, like from Tipranks, were pretty jarring, talking about that big stock drop after the Q2 results. Why such a sharp reaction?
Well, the core numbers, they definitely tell a story that would make investors nervous.
How so?
Their revenue for Q2 2025, it came in at $32.5 million,
Okay.
which is down 18% from the same time last year, Q2 2024, when it was almost $40 million.
18%. That's significant. Did they say why?
Yeah, they pointed primarily to lower volume on some key U.S. Army programs.
Ah, okay.
Seems like there are disruptions happening as the Army modernizes its data architecture, because of these federal efficiency efforts.
Gotcha. And revenue wasn't the only issue, right? What about the bottom line?
No, definitely not. The net loss figure was pretty staggering, $228.6 million loss in Q2 2025.
Wow. Compared to what last year?
Compared to a $14.4 million loss in Q2 2024. So a huge jump.
Okay, $228 million loss. That sounds really bad. What's driving such a massive increase? Is it all operational?
A lot of it actually was driven by non-cash changes. So not directly operational spending in the quarter causing all of it.
Non-cash. Like what?
Well, the biggest chunk was $135.8 million from changes in derivative liabilities, financial instruments.
Okay.
And then another big piece, $70.6 million, was a non-cash goodwill impairment charge.
Goodwill impairment. So basically writing down the value of past acquisitions.
Exactly. It's an accounting thing, but it does suggest they're reevaluating the expected performance or value of things they bought previously.
Interesting. What about other measures like adjusted EBITDA?
That was also negative $8.5 million this quarter, compared to negative $3.7 million last year.
And why the decline there?
They said it was driven by lower gross margin and also increased spending on research and development.
Okay, so R&D spending is up and the gross margin.
That slipped too, down to 25.0% in Q2 this year from 27.8% last year.
So just looking at these numbers, revenue down, big net loss, negative adjusted EBITDA, lower margin, it sounds like a tough quarter operationally. How did this stack up against what analysts were expecting?
Yeah, it was definitely seen as a miss, a significant miss, actually.
In what way?
The revenue, $32.5 million, was quite a bit below the analyst consensus estimate, which was around $40.6 million.
Okay, missed on revenue.
And the adjusted loss per share was 0.71 cents. The consensus was expecting a loss of just 0.6 cents per share.
Whoa. 71 cents loss versus an expected 0.6 cents. That's a huge miss.
Exactly. And that kind of surprise usually leads to the kind of stock reaction we saw.
Right. Okay, so clear misses, stock drops, but, and this is where it gets really interesting, amid all these challenging numbers, their balance sheet has a completely different story to tell.
It's kind of the twist in the plot, isn't it?
What are we talking about here?
Despite all those headwinds, BigBear.ai reported a record cash balance, $390.8 million as of June 30th.
$390 million. How does that compare to before?
It's a massive jump. At the end of December 2024, they had about $50 million.
Wow. So they raised a lot of capital.
Seems like it. And crucially, they said they're now in a net positive cash position for the first time ever, almost $250 million net cash.
Net cash positive. Okay. That does change the picture. Anything else on the positive side?
They also mentioned a backlog of $380 million. So future contracted work is still substantial.
Right. That huge cash position, though.
Yeah.
That has to be key to understanding the optimism.
Absolutely. It fundamentally changes their ability to maneuver, moves them from maybe defense to offense, strategically speaking.
Okay, so we have the tough Q2 operational results, but this massive cash infusion. How does the leadership square that circle? How can they be so optimistic? Let's dive into their strategy.
Yeah, that cash is central to it. The CEO, Kevin McAleenan, explicitly said this robust balance sheet lets them make significant transformational investments.
Transformational investments, meaning?
Meaning using that money to really change the game for them. He directly linked their recent fundraising to what he called tremendous opportunities coming from the One Big Beautiful Bill.
The One Big Beautiful Bill. Okay, I have to ask, is that its actual name?
No, that sounds like their, let's say, enthusiastic nickname for it.
Got it. So what is it then?
It refers to a huge new legislative package. We're talking over $170 billion in supplemental funding for the Department of Homeland Security, DHS,
Okay.
and another $150 billion to the Department of Defense, DoD. And this money is specifically earmarked for disruptive defense technology.
Disruptive tech. So right up BigBear.ai's alley, presumably.
That's exactly what McAleenan argued. He said, quote, "This is not incremental funding for innovation. This is a transformative level of investment, and that it's directly in our lane."
Because they position themselves
as a mission-ready AI company with a national and border security focus. Yeah.
Interesting. Did he highlight any specific areas within that massive funding?
He did. He mentioned a massive increase in emphasis on border and biometrics, specifically citing over $70 billion in increased supplemental funding just for U.S. Customs and Border Protection, CBP, over 4 years.
And BigBear.ai sees itself as a leader there.
That's what they state, yeah. An area where they believe they are a leader.
So a huge potential boost from U.S. government spending. Is that the whole growth story, or are they looking elsewhere too?
No, definitely looking beyond the U.S. They announced a, quote, transformative partnership with some leading companies over in the UAE.
UAE, okay.
Yeah, under the IHG umbrella group. The goal is to accelerate AI development and adoption there.
Why the UAE specifically?
Well, the UAE is making enormous bets on AI. There's talk of a $1.4 trillion joint AI investment initiative involving the U.S. and the UAE.
$1.4 trillion.
Yeah. So for BigBear.ai, this partnership gives them a foothold in a market that's not just rich in capital, but also actively looking for the kind of advanced AI solutions they offer, especially for critical sectors.
Makes sense.
And the CEO was clear this is, quote, just the beginning of our international expansion. They also mentioned another partnership, Narval, down in Panama.
Okay, so global ambitions backed by this new war chest. How exactly do they plan to deploy that cash and chase these opportunities? What's the action plan?
The CFO, Sean Ricker, gave some insight there. He said the record cash balance, quote, will enable us to make significant investments, both organically and inorganically, in an order of magnitude that was not possible before.
Organically and inorganically. So growing their own stuff and potentially buying other companies.
Exactly. He talked about adopting an offensive posture, using the money to grow their existing portfolio, go hard after those OB3 One Big Beautiful Bill opportunities,
right?
Expand internationally like we just discussed, and also look at M&A, mergers and acquisitions.
So what are their top strategic priorities right now?
They listed a few key ones. Accelerate organic growth, pursue these key partnerships, bring in top talent, which is crucial in AI, and keep innovating.
And they're emphasizing their strengths
in disruptive capabilities in national security and their market leadership in security, travel, and trade. They gave examples too, like their Conductor OS platform used in the Talisman Sabre exercise, work on Army drone swarming, their enhanced passenger processing tech, a partnership with Analogic on threat detection, and something called Shipyard AI. So trying to show proof points.
Okay, so we've laid out the current financial reality, the Q2 struggles, but also this really exciting, potentially massive long-term vision fueled by cash and opportunity. How are they adjusting their immediate forecast, though, for the rest of this year?
Yeah, they did have to adjust their outlook downwards. For the full year 2025, they're now projecting revenue between $125 million and $140 million.
And what was it before?
Previously, they expected $160 million to $180 million. So that's a pretty significant cut to the forecast range.
Why the adjustment? Is it just the Q2 miss carrying forward?
They cited continued uncertainty around those Army programs we mentioned earlier.
Yeah.
And also, importantly, anticipated spending on new growth investments in the second half of the year. So putting some of that new cash to work might impact short-term revenue recognition or just reflects a shift in focus.
And what about profitability guidance, like adjusted EBITDA?
They actually withdrew their full year 2025 adjusted EBITDA guidance altogether.
Pulled it completely. Why?
Citing those same uncertainties the Army program timing, and the impact of these new growth investments makes it harder to predict the profitability outcome for the full year, apparently.
Okay, this brings up a really important question then. You've got the stock tanking, guidance lowered, but the company's talking about transformative opportunities. How are analysts making sense of all this right now? What's the view from Wall Street?
Well, according to TipRanks, the current consensus rating before this latest report came out was a moderate buy,
Moderate buy, based on...
based on just two recent ratings, one buy and one hold.
Okay, not a huge number of analysts covering it recently then.
It seems that way. And the average price target, based on those ratings, implied about 12.8% upside potential from where the stock was.
But the key phrase there is before this report, right?
Absolutely crucial. TipRanks explicitly noted that these estimates will likely change now that analysts have this new Q2 data and the revised guidance to digest. So we'll have to watch how those ratings and targets evolve.
Yeah.
Hashtag, outro.
So putting it all together, BigBear.ai really is at a fascinating, maybe even pivotal moment, isn't it?
It really seems like it. They're dealing with some very real, immediate operational challenges. Let's face it, those Q2 financials, particularly revenue and the net loss, were disappointing.
Yeah, no way around that.
But at the exact same time, they're suddenly armed with this huge cash reserve. A war chest, really.
Right.
And they see these potentially massive tailwinds coming from government spending, like that one big beautiful bill, plus their international moves.
So they believe these factors are going to fuel major growth down the line, especially in AI for national security and related fields.
Exactly, but it feels like a textbook case of, short-term pain, or at least uncertainty, for potential long-term gain, all driven by this strategic shift enabled by the new funding.
It really sets up an interesting dynamic to watch. Okay, here's something to think about as we wrap up. BigBear.ai puts so much emphasis on being mission-ready AI, particularly for national and border security. And we've talked about this transformative level of investment potentially coming their way through things like the One Big Beautiful Bill. Beyond just BigBear.ai's stock price or balance sheet, what broader implications could this have? Think about the impact of this kind of focused, well-funded AI push on how governments actually operate, on national defense strategies. How might companies like BigBear.ai, if they execute well, actually shape the future of these absolutely critical sectors? Something for you to ponder.